Hey guys, Dave Santarelli here from the Santarelli Exchange. This video, I want to talk about breakout stocks, and that's mostly what my service is. We do momentum and breakout stock alerts, and I want to show you how we go about finding those. All right, so in this chart here, what I want to talk about is how we use moving averages to enter and exit trades. So right here we see that Amazon, the 3-month chart here, and this is actually a trade that we made. I think this is one that made either 2 or 300% return. What we do is first we have the 5-day, the 10-day, and the 50-day simple moving averages. And you see here on a normal day that the stock trades between these lines, which are the moving averages. And when they're trading like this, I sit back and just watch the stock and wait for our signal. And you see here that the first day that we had a breakout above the moving averages, which that is, you see the green box here, the candlestick that traded above the 5, 10, 50-day simple moving average. This was our buy signal. This is when I alerted members that it looked like Amazon was breaking out, and we entered. I think we got calls. We might have gotten a spread, but either way, the trade ended up making 200-300% return. But as you see here, how we use the moving averages for breakouts is we enter the trade here, and we stay in the trade until we get the first day that the stock is red, which is a day that it was negative, went down, and the first day that it touches or closes below the 5-day moving average. So you see here that the stock was about 853 a share. Yeah, right around 853, 854 when we entered. And each day here, each candlestick is its own day. It's a daily chart. And you see the next day it shot all the way up to around 874, 875. The next day, didn't move much, but still an up day, up higher. Next day it went higher, and the following days it kept going higher. Okay, now see, here is the first time that we've seen some indecision here where it went all the way up. We have a big wick at the top. That means it went up, and then that means it opened up here and then closed at the lower end of this box. So we see the long wick here. That means the stock traveled all the way up, but ended up closing down lower than it opened for the day. So that was a sign there alone that might be time to exit the trade. And then the next day we got confirmation. The entry point here, the confirmation is when the stock trades above the moving averages. And then to exit the trade, this was our confirmation here. We had the down day, and it touched it closed below the 5-day moving average. And sometimes, it's iffy if it touches it or not. But the first down day there, we see it close below the previous day's low, and that was our sell signal. So we got in the stock, like I said, around 853, and we were able to close it at over $900 a share. That's over a 50-point move on Amazon, and that's huge. And that just happened in 1, 2, 3, 4, 5, 6, 7 days. So 1 week, and we had a 50-point move. And with options, that 50-point move is huge. If we got a further out strike, I mean, this position could have easily made well over 700% returns. Oh, like I said, we made upwards of a 300% return, and we were happy with that. And then you see here what the stock did the next few days, next few weeks. It traded right within the range of the moving averages. And then you see right here, we had another breakout. We had a breakout here. The stock traded well above the moving average, and that's our buy signal. Next day, it was a little bit higher, and then the frequent days, it just kept riding higher. So what happens then is we entered here on around 907 a share, And our sell signal was reached once the stock got to around 941 a share. And you see that here because it touched the 5-day moving average range. So what we're going to do then is we took it from 906 a share all the way up to 943 a share. So that again, that's a significant move of about 40 points higher, and we were happy with that. That's a nice trade, another 200+% return, and then we see here it started consolidating, and then it started breaking again, and even for little swing trades like this, you could have made the trade. You know, you bought here once it traded above the moving average, 943, and then we could have sold here on the first down day, 949. So, a nice 6 point move in with options in just 2 days. That's a nice little return of over 100%. And then you see here it happened again. Amazon's doing that again here. Amazon's breaking higher. I just got calls today for it actually. So we're going to see how that pans out. But if we go even back further here, so we can see this type of breakout and this type of signal that we have. And you see it right here again. Here is another buy signal. Actually, down here would have been a nice buy signal for me. But if we follow the rules and follow the patterns, right here is where would have gotten a buy signal just following the moving averages. I mean, I'm at the point. I've been doing this for a decade, so I really don't even need the moving averages to confirm a trend higher. But we see here again, once it happened, it moved above the moving averages and it kept going higher. And you see here, on a green day, it's okay if it touches the moving average. That's fine. That's still higher. It's still riding higher. And then, like I said, we had this move here from, what is that, 825 all the way up to 853. So that's a 28-point move. It's a nice move. And then same thing over here. Traded above. This is a big candlestick higher. This is a good buy signal. And then you trade it above until it reaches your sell signal. And you see here, I mean, following this method, this strategy, it's a pretty straightforward, simple method. You see here how the stock, it's still trading within the ranges. Here's the 50-day moving average here. So all down here was below, which sometimes the 50-day or 200-day isn't as important if we're doing short-term trades as the 5, 10, 20-day. Okay, so let's look here. And sometimes you do get false signals, which you got to be careful for. And as long as you follow the simple trading plan that I have lined out for you guys and posted in the room, then you're going to be fine. If you're making trades that make 200-300% returns, and you put on a trade that's a false signal, false buy signal, and it loses 50% tops, you're still going to come out ahead. And this works the same way for buying puts or shorting the stock. Once it trades below the moving averages, then it's time to buy. As you see right here, you got a good signal to start shorting or buying puts. And this was at what, 796, let's just say 800. And then it kept going down, and then here you go. I mean, it went all the way down to 755, and that's a good sell signal. And then here's another move. All these moves you see here, these are ones that we have played. I mean, we certainly don't miss out on breakout stocks. We look for those carefully, and we jump in as soon as we see one. So here you go here. Here is a buy signal. The next day it traded lower, but still within our range. It didn't trade below the moving averages. And then the following day after that, had a green day, nice up day. And you see here, it kept going. And here, even when the stock had a down day, it still was trading above the 5-day simple moving average. So our sell signal was not triggered yet. And you see the subsequent days, it kept riding higher, higher, higher. Even this here, that's not a sell signal. Not until here. This is our first sell signal right there. I mean, right here, you see that it kind of topped off. I mean, an experienced trader would know that this is kind of the tops here, especially on this third day, even if, the third day being from here. So your first down day on the top here, second down day, even if you're deciding, I'm not sure yet, this next day here, that should have been a dead giveaway that it didn't break the previous few day highs, and and it traded within the pattern of the previous day. It didn't trade above the previous day's highs. So that would have been your sell signal right there. And if we watch this here, I mean, this is a move from 774 all the way up to 844 or 845. And that's a huge move. And like I said, with options, that's an easy 500% return. If you're trading out of the money strikes. And you see here, as we keep going down, here we go. Here's another buy signal. This is a little smaller move here from let's say 765 up to 770, 772. And there's a move. And here you go. Here's the same thing. We got a buy signal right here, and the stock traded higher. And then we had a sell signal right here. And if you just keep following these moves for breakouts and momentum stocks, you're going to do well. And like I said, they're fairly easy to find. You're looking here at the 10-day, 5-day moving average, and the days that you see the stock consolidating or not doing much, it trades within these lines. And that's just days you say, hey, let's stay away from this one. Let's wait for the signals. And that's an important part of trading that I try to teach and preach to members. They expect to place trades, multiple trades every day, and that's not how you make money trading. You got to wait for those buy signals and sell signals and stick with it. I mean, trading's all about a plan, sticking with the plan, and executing that plan. And if you have the discipline to do that, you're going to come out very, very well at the end of the month. And you see here's another buy signal at $600 a share. Rode all the way up to 630, 30-point move. That's what from 630. That's a 5% move higher. And with stock options, like I said, that's an easy 100% return. Definitely well over 100%. There you go. Here's another buy signal. And you wrote it higher. I mean, sometimes you're going to have smaller signals. Like if you took this one, for example, here's a false buy signal. Stock was above the moving averages here. Following day, it traded lower, and if you waited the next day, you would have taken this out for a loss. But like I said, if you've seen the first day, like it just started trading and it was below this signal here, the 5-day moving average, you could have gotten out of that trade for well less than a 50% loss. There you go. Here's another. That's all over the place. See this one here? It looks like a great buy signal, and I would have picked it up here only because of it formed a hook pattern. And that's another thing you got to watch for. Like if you went just by this rule that I'm teaching you guys now with the moving averages, you would have said, this isn't following that pattern, that strategy. But if you know the hook pattern, which is one of my favorite patterns to trade, you know that once Amazon came down here and it started forming this hook, that it was going to start to rebound a bit. And this is great for a rebound trade after it has a nice decline like that. I mean, the stock declined from 590, actually all the way up here more. So it declined from 600 all the way down to 478. Wow. Right? Yeah. Wow. Look at that. It had a high of about 640 and dropped all the way down to 475. That's a huge move lower. So when you see a move like that lower, you know Amazon's going to have a bounce here, a nice little rebound. So that would have been a great trade to enter here, even though it didn't follow that pattern, that strategy I'm teaching you guys now for breakouts and momentum. But if you're experienced and you know certain types of patterns to look out for, you could certainly capitalize on that. And like I said, if you just look here, you see the stock trading within these moving averages, and that's just time to stay away. So let's just show another symbol here, another stock, just so you see this happens with every stock. All right, so Facebook here. Here's one that we trade a lot. This is actually a trade that we entered here, and we made some huge profits on this. So we see the stock at 140 here a share. We got the buy signal right here this day. We bought at 140 and boom. We until we got the true sell signal here. That's all the way up to 150. So a 10-point move. That's over a 10% return on Facebook. And with calls, like I said, that's well over 300% return. And then look at how nice here. Like sometimes the 5-day moving average, it acts as a support line. So you see here, you got a nice buy signal, and you could have rode it all the way up. And like I said, here's a smaller buy signal. Got a buy signal here. If you got in down here, the next day it was still kind of up, even though it was a down day. But you see here, and then you could have used this as your sell signal right here, and it's a smaller move. But you still would have made between 25 and 50% return. And then see, sometimes you get smaller signals like this from 129 all the way up to 132. So little moves like that, you're going to make between 50 to 100% return. Right here again, we had a nice decline. Facebook's going to rebound as soon as you see this nice jump here, which it traded above the previous few days highs. Then you jump in, and we wait for that sell signal. So there's certain patterns you can look out for, and things of that nature besides just for following the moving averages. But like I said, if you just follow a plan, if you have a plan and stick with it, and have the discipline to follow those stop loss orders and exit when you're supposed to exit a trade, and not wish and hope for your stock to come back if it takes a loss, then you're going to do very well trading. But a lot of traders don't have the patience, and that's why so many fail. So it's important to have the discipline to follow a plan and follow your strategy. So I hope this helped, and we will continue with another lesson later on. Thank you. Anyone that would like to join can join us at thesantarelliexchange.com and use a promo code for a free trial. All right. Have a great night.